go ahead and get started there. So the first question is about reversal structure and what I mean with a weak reversal versus a strong one. And to start with this, let's head over to something like this, right? Because this is the one that was specifically talked about. Is you can see with this reversal structure, right? Or if you're anticipating a reversal, you just take a look here. It's kind of a slow grind up, right? And then we move down, back up, right? Take a look at that, right? Now, what we want to see is you want to see something that's going to trap people, right? Because if you think about the market in terms of, this is kind of how I think about it, is I want to be where people are getting screwed over, right? So if we're expecting this to be a reversal, right? We want to see a convincing enough run outside of this range normally and then back in, right? Because if you see a convincing run outside, then people who are trading this breakout are going to get in, right? And it's also sweeping anyone short in here out because their stop will be there. And then when it comes back in through the range, anyone who is long here is underwater, right? So they're either going to have to cover, right, or hold their position. So I want to see a convincing run. This isn't a very aggressive run, right? You can see this is, if you're focused more on the bodies, I can just turn it off so you guys can visualize actually. Right, if you see, it's not very aggressive, right? It's just up, it's kind of a slow grind, has a nice move down, recovers, right? So taking a look at that versus, let's go maybe to gold. There'll be one in there. Let's see. Go to that one. Right, something similar to this, right? We can drop down one more time frame to make it a little more clear. But you see how this was an aggressive move out and then back in? It'll be more clear on maybe a 15, 30. We're getting an aggressive move lower. We're gonna have to go all the way to a 5, right? See how this aggressive move lower is convincing enough below the lows to where that's going to induce people who think it's going to go further short. And then it comes back into the range. Let me find a better example of what I mean. It's more so similar to this in a way where, right, we have this aggressive move higher to sweep out and then aggressively back in, right? And that is, if you understand the phases of the price, a reversal is just expansion met with expansion, right? It's not expansion into a retracement, right? That's why we want to see the aggressive move with that. Sure, you can send me the DM. Does that make sense? Move my desk a little, sun was shining. Yeah, I've talked about that a few times. It's just more so like you're trying to frame a reversal. Most of the time, it's always going to be after off of a high or a low, and you want to see expansion into that and then expansion off of that, and that's where the best reversals form. Right? And why is that? Well, that's going to create a higher time frame wick. Right? This is a very unusual wick because the daily candle is essentially 2 days. You see how aggressive down here, aggressive back up forms this wick. So yeah, expansion to expansion is reversal. What's confusing me is it also, all right, I'm not giving, which one is swept to high? Oh, okay, I know what you're saying now. Let me go to that example. You're saying it also swept a high from the 6th. I'm going to be super honest with you. I don't know what high you mean this high? One thing I kind of think about is sure, I can use this from a daily for an objective or something like that. But when I think of terms of recent price action or like liquidity, I'm more so focused on the previous 3 days or, the most recent price action. Once you get a little bit too far back, that's when it's a little bit less likely. And the thing is, if I'm trying to frame a reversal off of this point here, I'm not trying to catch the high, right? I'm going to wait for the hourly change in the state of delivery or that lower time frame to align with that idea, right? So if we go back to the hour here, we don't have any sort of hourly change in the state of delivery, right? Does that make sense? We hit here. I would wait for, if I'm trying to trade a reversal, I'd wait for a close below there and then look to get on side. Because this is kind of just trying to pick a high. You can see, trying to pick a high. Anyone who's trying to just pick a high on a day like this is mostly going to get railed. Yeah, more recent points of interest are more important. If you're trying to frame something off of like further away, right, you're going to need more confirmation off of it. I find it's just best to just focus on what the current trend is doing. Like if you take a look at this is pretty bullish. So for me, why try to fight this and short it when I could just find swing lows and then go with the trend higher, right? And that's why my whole thing is trading continuations, not reversals. I always thought that you would have an expansion retracement into second expansion, then reversal. So you don't have to, like you don't need to have, it's not sequential like that. You don't need to have expansion, retracement, then expansion, then into a reversal, right, to form a high. You can have expansion into an expansion to form a reversal, right? You just have to start with expansion. Then you're either going to get retracement to go higher, consolidation, in which you'll either manipulate one side of the range, right, to trade the other way, or you're going to get that true break, or expansion into expansions reversal. So whenever I say expansion, I'm just thinking those three things. If I get a nice closure, then I'm only thinking retracement or reversal. If I fail to go anywhere, then I'm thinking consolidation. I mark out the high and the low. Then I just wait for one of those to get purged and then trade it the other way. So it doesn't need to be sequential like that. Like it's not, oh, it needs to expand, then have a retracement, then expansion, then reversal. It can happen, right? But it doesn't need to happen. For instance, you know, let's see if I can find an example of what you're talking about. It's not really a clean one here. Let me see, maybe on like gold. I like gold within the phases of price. Not a great one, but here's an example. If we just expand here, we don't need a retracement and then another expansion, then a reversal, right? Could that happen? Sure. But this is what I talked about with someone in a one-on-one too, is if I'm anticipating price to trade lower here, why am I trying to predict out what Friday, Monday, Tuesday, Wednesday, Thursday doing? Why do I care about anything other than the next daily candle? I don't. Because why would I try to predict what's going to happen after without using the new data? Like that's just dumb to me, right? Like why would I say, oh, it's going to go higher here without seeing the day before? Because if I see this next day and I see us drop down and react out of this fair value gap, that's more data that I can say, hey, yeah, we can go trade higher. This is telling me a reversal to trade lower. So why would I try to predict Friday on a Wednesday instead of just waiting for the next daily closure, right? So that's the whole foundation of my model of waiting, right? You can see here, expansion, that's expansion back down, so I view it as a reversal, right? It doesn't need to come back up, like you were saying. Expansion, let's say that was a retracement, expansion, reversal, right? It can do that, sure, but it doesn't have to, it's not sequential like that. How your new indicator blends into this. So my indicator is just really my whole model. That's all it is. So I mean, let's see. Let's go ahead to something. We'll just go to like this. So I'll have my model. Right. So let me do a little explain on this because we're talking about it. Once again, I view this as Friday, Monday going lower, right? Monday, I generally like to see opposed range, but it can make the high of the week, right? Now, the way I view this is we are in this little uptrend here, unless we go close below here, right? Now, the main thing is I was looking for this area to support price because with this closure, if we're going to trade higher, this low won't get invalidated, right? Then I generally look for, okay, do I have any point of interest in here? I don't have a fair value gap or a swing point really, so then I can just use this area really anywhere in the discount of this range. Then I have a candle closure, right? So if we're walking through this model-wise, we have a candle 2 closure. I drop down to the hourly time frame, and then I ask myself, do I have a CISD, right? Because in the flowchart, we have an idea. We retrace back into that range if we're going to continue bull structure higher, right? We're going to form a swing here. We have a candle 2 closure. We have a change in the state of delivery. So if this is going to occur, now I can look for entries in the following day, right? And all my indicator does is it just plots that all out for me, right? So once we get the daily closure, it says, okay, I did close back inside that previous day. I do have a change in the state of delivery. So marking out 0.5 of that higher time frame candle, I'm anticipating from this low here, or from this equilibrium level to the open, that should respect price. And then once again, I talked about this, is I'm in this area, I want to see price respect. Currently my invalidation would be here. Do I have a new invalidation? Well, we have price reach into a fair value up here, goes over. So now I have a new invalidation. So if this is going to trade higher, I know that I want to see price open, low, go trade higher before closing. And I don't want to see it go take out this low. So if I wanted to trade positionally, I could enter anywhere in here, I stop there, or I could let a swing form in here. Now, since there is no fair value gap or a swing low to take out here, that's when I can use the order block, right? Or I can just use the mechanics of a daily candle. Right here, you can see we get a candle 3 closure. So then I could go use this on the lower time frame, right? So then I could go to the 5-minute, see if it pops up. And then there's the bullish one. So now I have a 5-minute setup in the hourly setup, and the hourly setup is in the daily setup. And then that's generally where you get your very nice trades. And the same thing with this. I could look for an entry to form in here or an intra-candle change in the state of delivery. Once again, where would my invalidation be? Well, can always be on that low. Can I refine it? Well, we also rushed into a fair value gap here, closed over those. Right, so once again, kind of the same thing. So if I wanted to buy that, let's say, I'd have my stop on that low. And then if I wanted to partial, I could partial at this high, which would be right around 2R there, right? Or I can go back to my hourly time frame and say, hey, where am I looking for this to go? Well, if I want to use the projections, I could target there or up there, or just look to target some swing points on this side, right? And that's where you get some pretty decent moves, is when you align those time frames together. So all my indicator does is it just takes the flowchart and applies it. You have to understand how the model works to really make it make sense. So that's why I would say for most, especially if you're just starting out with my model, I wouldn't recommend the indicator until you actually understand what's going on. Because if you just try to use the indicator and don't know what's going on, you're going to get confused, right? You're likely being lazy, right? So actually understand what's going on before you try to use something like this. It's more for efficiency, right? Because I don't have to chart this out anymore. It just shows up on my chart, and this is how I would chart it up, right? So it just saves me time, but I know what's going on. The indicator, you can take a look for it here if you want. It's just my fractal model indicator. Let's see. Let me see. I missed a few questions. Hopefully that made sense. Aces. Hi, I'm new to the group and learning the model. I entered today on ES spot, put my stop loss at a swing low. I got stopped out. Maybe I put in the wrong spot. Can I share my trade? So I guess I'm a little confused. The entry or the setup here, Claire. Let me screenshot it and put it on the screen. And maybe if you could say what model specifically you're trading and timeframes, stuff like that, that will be helpful. We'll go over to, you said ES. See if we can try to find where you took this setup. do this real quick. Let's see. Right there. So were you trying to enter? I'm a little. Oh, you entered here, and then sold there. Is that correct? Trying to see. It's like I'm just a little confused on the model, because to me it looks like you entered on the retest of these highs right here, and then sold here, which that's not what my model does. So maybe there's differences in your model. If you tell me about your model, maybe I could try to help. So I'll give you a second to answer that. Because to me, if you bought there and sold there, you didn't really get stopped out. I guess I mean you stopped out before that move. If you want, I can talk about that and why that makes sense to get stopped out before you go. I'm just confused on what model you're trading, so it's I'm trying to get people confused. Let me read through a couple more of these. Wasn't mean predict, just noticed a lower time frame. Okay, cool. Glad that made sense for you. I have noticed that if you can't close above the 1 to 1.5 deviation, you get a full retracing floated. The 2 to 2.5, retrace to 1.5. Yeah, so that can definitely occur. If you take a look at standard deviations, there's some things that come with them that can make sense. Oh, look. Is ES reaching a supply zone? I don't use supply and demand. I don't know how to, so I don't really know how to answer that question. Sorry about that. I don't need a daily profile per se. It's more so I just want to see how the daily candle is forming. So for instance, we'll come back to this clear. Give me one sec. All right, I'm back. So for daily profiles, it's less about, oh, it needs to form a low or high right here. And it's more about how it actually forms, right? So for today, it doesn't have really a classic London low a day, New York continuation, right? It's just Asia forming the low, and then we're getting a continuation, right? And for me, that's fine. But like going into this day, I have to ask myself, where's the invalidation? And I don't want to see price trade below here, right? And because that's an opposing candle, because it reaches into a point of interest. And then we close through it, right? So if we open low, I'd want to see it remain above there generally before trading higher. I would say for daily profiles, I would check out AM's 7-hour candles because I think it's going to make it a lot more mechanical and easy for you to understand. Yep, I entered the retest. Where should I place my stop loss? I haven't looked at your model, just learning the expansion. So with this isn't really either AM's expansion model or my model. Sorry, I'm just going through a bunch of, I accidentally hit the spacebar. Right, so like for AM's expansion model, he doesn't like we don't really do like a break and retest. And then for my model, my model doesn't enter until later in for this continuation. It's not entering on that. So I can't really answer where I'd put my stop loss here because that's not really how I'd take a trade. But assuming if you're taking a break and retest, then you probably want your stop below lows, right? If you're expecting us to break, retest, and hold this level and trade higher, then it shouldn't reach the lows. It's just not how I personally trade. So I can't really help much there. Let's see. Skrilla, does that help? I would check out AM 7-hour candles because that's going to help you a lot more with daily profiles. Do you always ask for daily profiles to take a trade? I don't need daily profiles, like I said. It's just more so the context of how the daily candle's forming. So yes, it's the daily profile, but it's not necessarily the daily profile, you know? Like for instance, right here, this doesn't fit under one of the daily profiles because it's Asia making the low. But if you understand what's actually going on here and that we have formed the wick of the daily candle here, right? And that wick I'm expecting to form, then I'm expecting this low to hold into it for it to expand, right? So it's not necessarily the daily profile, but it is the profile of the day. Okay, cool. Glad that makes sense. Yeah, Claire, I would say it's just hard to. The thing is, I view price in a very specific way, and so trading like a break and retest of a consolidation is not really how I trade. So it's just very hard to answer questions with something I have no expertise on. Right? On NQ, if you're doing fractal model on the 15-1, would you have to wait for the 15 to come back to the OB at 10:45 for entry? What asset are you talking about? Oh, NQ. All right, so that. Okay, cool. So NQ. 1 minute. And 15. Okay, I'm a little confused here. Fractal model on the 15-1, would you have to wait for the 15-minute to come back to the OB at 10:45? So I wouldn't be looking for a long entry in here, personally, because within my fractal model, I'm only looking to trade candle 3, 4, right? So if you notice, we have a candle 2 here, candle 3, candle 4. We already had that expansion. And if you notice, this candle is already over those highs. So I'm not looking to try to trade this long because to me, this expansion move's already occurred, and that's where I can get caught up in a retracement, right? Or a reversal or consolidation. So if I'm looking to trade this, I'm gonna have to have a new swing form. Yo, there's a bee right next to me. How did that thing get inside? All right, sorry. I didn't get stung, so. Anyways, I'd have to let a swing low form, right? So you can see these lows forming here. I'd have to let some of those get taken out before I can try to long, right? So those get taken out. If I'm looking long, then I have to wait for this next candle to form. And then here's the first time where I could look long because price has swept out these lows to the left, closed back inside. It's not the strongest close, but it still meets the mechanics for the model to be looking for a long here, targeting the highs, right? And then what happens, let's see, we go take out the highs, right? Since we closed higher, then a continuation, the fourth candle, cool. And at this point, once again, because I'm through candle 3 and 4, I'm not looking to try to enter anything. All right, almost just got stung by a bee, that's crazy. Or something, some big fly. All right, okay, answer that question. Can you show an example of pairing the 4-hour to 15-1? Sure. I think, let's see. I feel like Garrett took something today on RTY that may line up for that. The main thing about taking a 4-hour trade or using the 4-hour is you're just going to use it like I use the daily for bias, right? So here I have a candle 2 closure, so I can look to trade candle 3 or candle 4, right? So then I go to the 15-minute, and within there, we're just going to go right here. Just to save time, I'm just having it mark it out for me. And we will see. So you can see here, we have a valid setup here because we get the change in the state of delivery here. Then we open, we get the closure below. So in something like this, if I'm trying to enter here, I would just be entering this with my stop up there, right? Because if I try to get too low of a time frame entry, that's where I'm going to get chopped out. But if you want to keep this bias into the open, what do we have? We have a sweep higher, and this candle does what? Sweeps, reaches back into the opposing candles, also closing below here, which is a valid what? Change in the state of delivery. So at the open of this new candle, I could expect this to sell off, right? So then from here, and go to the 1 minute, and then I have a 15-minute, 1 minute setup, right? Which you can see, got a little bit further ahead there, but it prints there. We have the T-spot, it reaches up. I could be looking for entries in here if I want, but I could also just wait for my entry candle change in the state of delivery, which have we gotten yet? Nope. Once we get a close below there, didn't get it, didn't get it. There, I could sell that, have my stop above there, and then either looking for 2R, it also lines up with the projections around that, or this is where I like to go back up to my higher time frames, right? So either go to my 15 or my 4 hour, and then you can see where those projections are there, right? So not the best entry in there, but I think you guys get the point. Okay, so that would be something like that. Nice, $9, sick. That's where we're at now. So that's a quick example of, you just essentially do the same thing over and over. You have a 4 hour swing, go to the 15. Once you have a 15-minute swing in a point of interest, then you go to the 1. All right. Can members access your indicator? So the indicator is completely separate, and that's through 2 degrees. So you can't access it. It is paid though. Any chance how you can show how to merge 2 time frames in your indicator as done in the YouTube video? Yeah, let's do it for this example here. So you can see here, we'll just set this. Let's say I wanted it on the 4 hour and 15, right? So that's going to stay on the 4 hour and 15. We'll copy the indicator, throw another one on there, right? And then right there, we'll drop the time frame real quick. Right now we'll have an automatic time frame with the 4 hour pairing. Let's see, switch that to automatic. Right, so what that's going to do is, if we go back into here, it'll just allow you to visualize it. It's a little bit messy because you have to hide the higher time frame candles a little bit. Right, so I'd hide the higher time frame ones. But what that does is now I can see that right in here, we have a 4 hour T-spot, right? So I'm expecting this area to respect. So I see price trade up to this on the lower time frame, drop lower and close. And then now I can see also we have the new 4 hour area overlaid. So you can see we have the overlay of the 1 minute, 15-minute T-spot here with the 4 hour T-spot. And then I get a setup in that. So then the overlays of those work together fairly nice, right? So you can see that will continue because that's the 4 hour one. So if I was going to do this, I would definitely clean up and like, let's say on the 4 hour one, I wouldn't show any of the drawings most likely, or any of those. I would just show the T-spot and then likely no projections or anything. And that's all I would show. And it'd clean it up to where I only see those levels, right? So if I clean that up, right. Hopefully that makes sense. Let me go through some more questions. But basically you just have to copy and paste so you have 2 indicators on there. And then you have one set to the right time frames. It's like for how I would do it, if I was going to do it, I have this set to the hourly and daily. And then I would just do this on automatic. And like one that I would actually do it on would be something like, we'll just go back to that first example of gold. Right, and we'll go to a daily. Let's see, one indicator will pop up. It's going to be messy. We'll go to this example. Right, if we're on the hourly. you'll see we have our hourly setup, and that'll print here. So we have our hourly. When we go to our 5-minute in there, you'll see we have the hourly green box there overlaid. And then if I am on here, show no history except for the current one, so it's not as messy. But there we are, only looking for setups in there, right? So I'm not looking for the short because I'm bearish or bullish, right? It works, cool. I'm going to be looking for, and then there's a buy setup inside the higher time frame buy setup, right? So that's the overlap. And I don't know why it's still showing. There we go. Now it's only showing the most recent one, right? Or if I know I'm looking only for buys, I can just set this to bullish, right? And then it would only show buys. And you can see you get a setup in there, right? A little bit of consolidation in there, but the low does hold to trade. I bought your indicator this morning and took the straight up to 1 hour 15. I used the C4 candle. Did I do this correctly? FYI, I made $1,500 on the top step account. Make sure it wasn't a fluke. So the one thing I'd say is I would go through my course. Like I said before, you don't want to just blindly follow an indicator. I can't lie, it's a rather solid indicator. It is just my brain put onto the chart. But the thing is, if you just lack the higher time frame bias or what's actually going on, it's going to print a lot of things that just don't matter, right? So yeah, it might have worked there, but I would suggest going through my course and actually understanding why it printed that setup. But well done nonetheless. I got stopped on the gold on Friday. Is it a valid loss or did I do something wrong? Well, let's take a look. And I'm going to remove these indicators from my chart for now. And get this sets back to somewhat normal. Yeah. And we'll just go here. Let me pull this up. So, okay. Stopped on this gold trade on Friday. Well, let's go take a look at gold. Let's take a look at Friday. First thing I'll say is you always want to be focused on the daily chart, right? So the way I viewed the daily chart here is this will be if you go through Ian's course and also mine. And within my model, I'm only looking to trade really candle 3 and 4. So if you notice, we have candle 2 here, candle 3 is an opportunity, candle 4 is an opportunity. I'm not trying to trade candle 5 because that's where I can get caught up in either retracement to go higher, reversal to go lower, or a consolidation, right? Now, with leaving these highs, right, and then we reach back into an opposing candle here, the retracement makes more sense, right? But on Friday, you're trying to long in this day. The main thing for me is we've already had this expansion. I don't feel comfortable longing generally after those days, but dropping to the hourly, let's take a look at what you saw. Right around, is that noon? You're in, well, you're in a different time zone. Okay, let me figure this out. Friday. So you're entering in here. Let's see. So yeah, I can talk about this. So you're trying to trade, I'm assuming this next candle. Just for future guys, if you do share charts, it's really helpful if you include the vertical lines for me, because a huge part of my strategy is when the higher time frame candles open on the lower time frame, right? So I want to see that. So what I notice here is these are the obvious targets, right? And then the highs, right? So let's see where you entered. Okay, you entered there. Let me double check so I don't mix it up. So I'm just going to screenshot it, put it on the screen. I can match it up. It looks like you entered right in here. So we're going to do this real quick, just so I can explain my model. So there's a few things that I want to do when I'm entering a trade, right? Your entry was up in here. Is if I'm trying to enter an expansion candle, I want to be in or around the opening price. And why is that? Well, if price is going to open low, expand, make a high and close, if I enter around the opening price, that gives me the ability to catch this expansion, right? If I'm entering high up into the range, the expansion has already occurred, or at least a lot of it, right? So then I don't have much room to expand more until at least a new candle, in which I'll just repeat the same process, right? So if you notice here, we're opening here, and your entry was up here, right? Now then the second thing is, if you're entering in here, let's say your stop is here, and you're looking for 2R, the easy failure swings here are right there, right? And that just doesn't really give risk to reward. So for me, if I'm trying to trade this and I see we've already expanded and this candle's already expanded, I'm just going to wait for a new candle to form a new swing, right? Let's see. Maybe I miss it, maybe I don't. And in that one, I likely miss it, but once again, right here, if we're trying to long this, I want to be entering where? Early into the candle, near the opening price. If I miss this here, I'm likely not chasing this because it's already starting to expand, right? And let's see, almost about to take out those highs, but that's just something I missed, right? Because candle 2 reversed and expanded, right? Sure, candle 4 continuation, but does that make sense? Kind of, I feel like you're just entering a little late there. That's all. Okay. If aiming to take A+ setups with a Fractal, would you say it's a must to watch more than one asset? No, you don't need to. You can focus on one. You're just going to have less trade frequency. That's all. If we had an intra-candle change in the state of delivery in C3, but price went below for bullish setup, the T-spot, would you can still consider it valid? Well, generally, we'll just use this as an example. If price is going to expand in this candle here, right? You have to think, candles have two things. They only have so much time, and they only have so much range, right? It's usually not likely that some candle is going to go all the way down here, all the way back up, right? Like that's just too much range. If you notice, they only normally have a certain amount of range, or that average daily range, or the average range of the candle. So if we see this candle drop all the way down here, and then all the way back up, I'm viewing this as we already used, a 0.25% move and a 0.25% move up. That's 0.5% already a movement in this candle. It's more likely to not really expand, and I'd rather just wait for the next candle, right? So you can see this one uses all its range to kind of consolidate. When does it start moving? The next candle, because then it gives it more opportunity to move, right? Does that make sense? So there's cases where if it's not that big of a distance, there's cases if it's not that big of a distance that I will consider it, but in something where it's just making too big of a wick, it's not likely to expand, and I'll just wait for the next candle. Okay, hopefully that makes sense. All right. I know you mentioned that you typically trade based on candle 3. I sent a picture of Euro JPY where candle 4 and 5 are available for trading opportunities. I decided to take trades on candle 5. Yeah, I think that's fine. And I think I need to make a video or something on this for like a protocol for candle 5. It's just more discretionary, and I try to keep things super simple. So if we take a look here, and this is kind of just going over what I just showed last time, right? Is if we take a look at here, we do have a candle 2 closure, so we sweep out the low and close back in. Candle 3 expands, right? Now, if candle 4 is also going to expand, it's going to have a small wick, right, and then expand. But what did it do? It made a very large wick, or use most of its range to go up and then or down and then back up. Right? So if we go to the hourly time frame here, I'll show you what I mean. Right? See how it went all the way down, all the way back up. This moved, right? If we take a look, 1.1%. This moved, right? 0.6, 0.7%, and then all the way back up 0.7. These candles moved about the same, right? This expansion candle this much. But you see this candle made the move down, making a large wick, and then back up. So if we have a reversal candle here, when is it likely to expand? In the following candle, right? And so with your target resting right near there, if we have that nice open low, we can expect that to expand, right? So open low, sweeps out a low into a fair value gap. There's your intra-candle change in the state of delivery, right? Trades higher to the high. So I think that's valid. For simplicity's sake, I always just say don't look at candle 5. That would be a scenario where it can make sense because you're treating candle 4 like a candle 2. So like the best way I can kind of show this is screenshot. Come down here. If you saw nothing else but this, right? Whoa, that's quite large. If you saw nothing else but that, you'd probably tell me that this is a candle 2, right? You're like, oh, candle 2, candle 3. Right? And so you're almost treating that like a candle 2. Candle 2 reverses, continuation. Or you can just say, this candle reverses, this one gets a continuation. There is no lifetime for the indicator, sadly. What if 10 a.m. and or 6 a.m. and 10 a.m. are neither 3 or 4? Look at a different asset. Yeah, there's just, within the fractal model, there's nothing. Unless you trade candle 2. I would say ask Garrett on those because he is far more advanced within the 4-hour candle because I don't really do much with it, and that's a big part of the strategy. Can I show an ideal candle 2? Well, without going anywhere else, it looks like this. Basically, we have a nice strong move down and then back up. But I'll just draw. Basically, what happens is we have some sort of consolidation or any really low in candle 2. Candle 2, I like to see this structure. Right, and then the most ideal setup is a sweep it back. This is the most ideal setup for me. Candle 1 here, sweeps out candle 1 low, right? To get that, we have our change in the state of delivery. And this is the structure I like in candle 2 for a wick, because we have a nice open, right? We have aggressive down, aggressive back up, retracement. And then I like there to be a fair value gap or somewhere in here, or at least just sweeping out this low, right? And then we get an opposing candle formation there. And I can just long that until the close, right? So going back to not the exact same thing, but if we're just viewing this as a reversal candle, right? It's not quite the same, but here we get the close through, right? Here we have that fair value gap. Here we sweep out the low in that fair value gap. Here we close over, open low, just hold this until the candle closes, basically. Because if it's an expansion candle, it'll close in the highs. When not to take a trade is usually just following expansions, right? Unless if it's going to be consolidation, or really it just comes down to if I don't have bias, I'm not going to trade. It's really just that. A lot of it just comes through experience. It's a lot of self-taught. Like I can show you so much, but a lot of it just comes down to like you have to be in front of a screen to see it. What is a T-spot? I would go through my course. It's in the course. That's going to be the easiest way for me to explain. Otherwise, I'll have to draw it all out. For fractal model, higher time frame C2 is pretty much predicting a swing, and C3-4 is the expansion which you look for in a trade. Yeah, so the way my model works is, I'm just going to go back to that gold example, maybe. Just keep coming back to it because it's just one of the most recent decent ones. That's just good for teaching. Is if I'm trading this candle here, this isn't technically a swing point until this candle closes, right? Because it could go take out the low and it's not a swing point. So when I'm trading candle 3, I'm trading the anticipation that this is a swing point, right? if I'm trading candle 4, I'm trading that this swing point has formed, and then I'm expecting this trend to continue. So that's all it is. If aiming to take A+ setups. No, I don't skip anyone. I just, if you look, there's like 30 questions. I just go one by one. When you enter on candle 3 after a candle 2 closure with a CISD, is the entry generally following a sweep or of a swing formation, or a sweep and a close above? So that really depends. If I'm like rather confident on a trade and I just see us drop down and form a swing here, I'll just take the swing and I stop on that low. Or if I need more confirmation, then I'm going to do the intra-candle change in the state delivery, right? So let this where I'm anticipating the wick to warm. For most people, this is the way to go. If you try to do it this way a lot, you're going to get stopped out so many times. That's all I'm going to say. Do you reckon some time frames work better with your indicator? I mean, it is fractal, so it's any time frames. I personally prefer the daily hourly 5. That's just the time frames that align with me. Other people do others. What do you think of the most recent 5-minute, 1-minute fractal happening on NQ? I don't know how long ago that was, but I'm gonna take a look. 1 minute. I mean, not the biggest fan of it. The reason being, candle 2 had what? We'll just replay it for the sake of things. See how candle 2 also expands? So the way I view this is, okay, price could retrace all the way back up here and still be valid to go lower, right? Or it could just go there. So like just initially I'm thinking, okay, if I'm taking an entry like this and my first target's there and my stop loss is like up there, that just doesn't make sense, right? The next thing I think about here is candle 2 not only reversed but made quite a large range, right? So if this expanded, right, I can get caught up in a new phase of price delivery here, right? So I'd either want to wait for a very clear change in an intra-candle change in the state of delivery, right? So like this is the first valid setup, but what do I notice? It's already most of the way through this candle, so I'd rather just wait for the next one, right? And then now at this point, I view this as a consolidation, right? So like really I'm wanting to see at least this high taken out, then trade lower. Let's see. Did it take that out? Okay. First possible entry would be if we close below there, right? So I could take an entry there with my stop there. It's just not something I really consider because this is just entering consolidation. Right, let's see. Yeah, so it does work. Would it hit 2R? If I enter on the close, likely not. Not even 2R to the target. So then that's when you'd have to maybe use a retest. It's just not something I'd really consider, but that's how I'd approach it. Right? If you notice, this candle didn't do much, so I'm waiting for the next one. I need at least a sweep of a high. The only reason I didn't expect this high is because we did get that. The reason I didn't want to enter that is because it was too late into the candle to expand, so I might as well just wait for the new one. And if I miss something like that, that's totally fine for me. So, not something I'd really consider, other than I would like to come take out that oil. I don't know if it did or not. No, it didn't. Now you see we get in a V shape down back up. So generally when this happens, now we're just going to run back to these highs. Right, and you can see the failure to understand. Let's see. Yeah, all these streams are uploaded to WAP. Anyone know the indicator? If you look pinned in GT lessons, there's a bunch of free ones. And the one I'm using is my actual indicator, but it is paid. And like I said, you don't need a paid indicator. Yo T, for your GPY chart you were on, how did you plot other possible targets? How did it? That's just built into my model. So if we go Euro GPY, right here, we're on the hourly. It's just always going to plot my targets. So in this case, that's the only one because that's the previous highs in the swing. Basically, all it does is it takes a look at the higher time frame candles to the left. right? And it's gonna go, okay, there's a high, that's a target, there's a high, that's a target. Because that's your previous day's highs and lows, which is your liquidity, right? That's all it is. Okay, we'll see if we can, oh, we gotta hop back there. Q1. Yeah, if I had to guess what happens here, sweeps this high, if we come back into the range, then we go right back to these lows. But not speculating on that. No, I didn't take any trades today. I've honestly been pretty sick. So, last 3 days, I've kind of been in bed most of the time. I haven't even gone to the ocean today, which is, if you know me, it's pretty rare. Another question, do you have data confirming C3 is less risky? Yeah. I mean, the thing is my model doesn't even plot it, but do it for yourself. Go to any time. The thing is, go to any time that you have just a change in the state delivery, right? Within a C2. And a lot of times you're just trying to fight that trend, right? There's only certain scenarios where it can make sense. And that's when you have a very small wick for the reversal candle. But that's why I require the higher time frame closure, because it's based off the higher time closure. Will you have more videos about my model? So if you go through my course, those are the basic ones. That's enough to understand it, I'd say. And then really the live streams are where you actually get to understand it, because that's where I answer everyone's questions. So if it's too late into the candle, you wait for candle four. Yeah, so when you think about trading an expansion candle, right? Like this candle right here, to me, it's not likely to go expand all the way through the lows, right? Now that I say it, watch it do it. But all I really expect is if this is going to be a reversal candle, it's just going to go to the opening price, right? And then I'd want to see it hang around, and then right at the open of the new candle, trade lower, right? It's going to do it because I said, oh, that's not likely. But that's usually what I expect because we made such a long wick here, right? Granted, who knows what happens, but that's just how I view intraday price action right here. Like, I don't expect this candle to flip, right, and then just go and expand lower, like something like that. Like, I don't expect that to happen. That would have to do it in the next candle. So, yeah, it's too late into the candle. And that's why it's so important to me to see the vertical lines, because I visualize it. Do you like the H1 candle 2 pivot, or are there lower time frames you're comfortable with? I've been doing it for 2 minutes, but I'm hesitant because too low time frames noisier than higher time frame. I mainly use the hourly and then the 5 minute. I don't really go much lower than the 5 minute. I find that I can just visualize the lower time frames using the 5 minute chart if I need. I never thought of this before, but if you have two candles make perfectly equal highs, what if C3? I mean, it happens. That's fine. It's just not gonna plot my model. I think that's how we put it into the code. It's pretty rare. It happens though. Yeah, the thing is, if you're taking something like 6E, you have to realize the liquidity is so garbage on those. Let's see. Right, if we go to 6E, right, and we go to a lower time frame, like yeah, you're gonna have equal lows when candles look like this. You know what I mean? Like they're so blocky and kind of gross, right? So like yeah, you're gonna have equal lows on reversals. So like if I was trading 6E, I'm just gonna watch Euro USD, right? Because that cleans it up a lot for me, and then I would just take my trades on the other. Right? So for instance, here's an hourly 5 minute model. Shall we just go through it? Right? Because one, we have the reversal up here, which is another hourly 5 minute model, right? What do we notice? We trace back up, reverse, engulf. This, you don't want to see, take there. Not the best close, but there we go. Starts off, and then we trade to the target, right? And then this one I likely wouldn't consider because we have all these lows here. I don't know what happened. Oh, we're just consolidating. Yeah. I'd want to continuation at least to there. And let's see what happens. Yeah, just leave it. Right, so yeah, that's what I would do. To be honest, I was just looking to find something I could trade more frequently. I feel like I never find a setup on the power 5 minute. Maybe if you just mean like more assets, I would just watch oil gold. Oil gold could do even copper. But copper's not as clean on the lower time frames. NQES oil gold, I think those are fine. I can definitely get 3 trades a week off of those 3 using the hourly 5. If you need more than that, then add more, maybe currency futures, but with currency futures, I wouldn't personally be entering. Like if I'm trading currency futures, I'm going to be doing it on a slightly higher time frame most of the time. Small wick. So the thing about small wicks, it's not within my model because I'm not gonna. I don't like to talk about it because it's just gonna confuse more people than help more people. But if we're expecting a reversal to occur, right? Let's take a look at something like this, right? We have an open, we trade pretty high up, right? Make a large wick, come back in. When we have a large wick like that, like I just showed, we spent most of our range forming this wick. I'm not expecting it to go expand. So I'm looking to trade the next candle. If we take a look at something like today, you notice we didn't use all our range making the wick. We made a small wick, then we have a reversal off of it. Right? Right, and then that's when we can still get that expansion lower. Right, and then go to 5 minute. It's not the greatest, but 9:30 opposing run. If 9:30 moves higher, what do we expect for 10? 10 to be a continuation. If we get that closure, we can expect closure, retest. You want to see over 0.5 of that. Is this little tiny continuation off of it, right? So that's an example. It's just about range. It's timing and range. If candle 3 consolidates, could you look for candle 4 to knock out the consolidation experiment? Yeah, that's definitely possible. And the thing is, if you do that, you're going to be forming a candle 2 within candle 4. So that's where, if you study that a little, I won't go too much into it because it's going to be confusing for people. How do you do NQESC and I can't find nothing? You can't find anything? All. I mean, these ones are only set for this, but usually there's a few setups. I mean, you'd have to see. The problem is if we have a large overnight session, New York's not usually great for something like oil here. But I mean, there's a continuation here, which is not amazing. Like, there's difference between a setup and a solid setup, but you take profit at 2R and leave runners. It really depends on my confidence in the trade and then what I want to do. Sometimes I'll take off completely all at 2R. Sometimes I'll take off at 2R, leave runners. Sometimes if I'm adding or pyramiding into a position, I'm not taking off at 2R. I'm adding even at 2R. We're not really normally at my profit target, but before that. And then my 2R turns into something a lot bigger. Thoughts on the 1 hour? So here's the thing of why I personally don't like something like this is it goes back to the daily chart. Let's see if we can go here. It should be like somewhere where I have my 15-minute one, maybe I deleted it. But if I'm trading the daily candle, right, and the daily candle looks like that, I'm not trying to short that. Look at all the people trying to short this all throughout here. Yeah, I don't know what it is with these crazy bugs in here. That is a massive bug. I don't know if you can hear it. It's really loud. But right, if I'm expecting price to close near the highs on an expansion day, I'm not really trying to short this, right? You almost use like a TGIF protocol, right? Something like this. Oops, I drew it backwards. Yo, I'm gonna go open the door and see if I can get this bug out because it is crazy loud. All right, we are back. But does that make sense? I don't really like to try to fade the daily range, right? Can that work? Sure. But even if I'm taking that, I'm really not expecting a whole lot. Like with that, I just expect it to retrace into there. Right, so then I drop back to the 5-minute. Sure, if that's my targets, can be. But with that, I'm normally going to use 0.5 of this. So that's around my level. Somewhere here. Like I just have low expectations, right? Yeah. That kind of makes sense. So it's like, yeah, sure, I could take this. Why don't I like this? We have all this consolidation here at the highs, right? Sure, we can go trade through this low. I'd anticipate it to trade through the low based off of how this made that failure swing in relation to. But then I'd want to see, like, how I view this is if this falls through the low and comes back up, it's going to take these highs. So it'd really have to just fall right through and just keep falling to really actually go there. Like, that's my view on it. Let's see. Remember, gold opened 9 a.m. and oil 8:20, not 9:30 last night. Yeah, they open at different times. They're just not that volatile. Knowledge is off the charts. I've learned more in the last 3 days than I have 1 year of trading ICT on my own. I took Aim's course and yours, and between those and this live stream, 10 things I didn't know. Yeah, that's great. I would say try to not focus on learning too much, though. I think that's the thing that people go into is they try to learn everything. Just find the few things that make a ton of sense to you and focus on those. Yeah, dude, that bug was so loud. I'll send you guys a photo in chat. It's like actually pretty decent size. Should the majority of the analysis, or holy, what a jumble of words. Should the majority of the analysis be done on a daily? Yeah, so if you notice with all my live streams, like everything starts with a daily chart for me. I'm not gonna lie, if I don't have my daily chart up, I'm pretty much lost. Like that's, like I just need the daily chart to understand where price is drawing towards, right, or where it's going. And then I use the hourly to just kind of visualize inside that daily candle, and then I use the lower time frames for entry. Yeah, I've already been analyzing this one. I was just kind of talking about it. How I view it is we have SMT. Yeah, we have SMT. So I'm not a fan because if we're coming back up into here, I just view these highs to get taken out. Right? I was saying if we were gonna fall, we would have just had to fall through this low and just keep falling. It's not very appealing, I would say. See you, Ian. Bug came to steal the stocks. Yeah, so now we have SMT here too, right? So it's just less likely. Like these highs are not really something I like to trade away from. This is like the example of like weak structure. We have an aggressive move out and back in. Like no, we just have manipulation. We've taken out this low at the range. All these failure swings. Now we have a, should we do this real quick? 15-second, we have a bullish setup. I don't like how it looked that low, but it does have SMT. Five-minute setup. 5-minute 15. That's crazy, actually. I feel like a crack addict. I'm gonna go back to not that. But this is not something I try to trade because the thing is I can frame it both ways, right? Like if I'm just looking at the hourly higher time frames, I'd want it to go lower. This little SMT with the lower time frame is telling me a little bit higher. How that candle opened up, it went higher first. I'll actually show you on the 15. We're going back. can't really view it, but we have a swing point in here. So I view like a closure below here as a change in the state of delivery down to then trade through these equal lows. So it's like it flips it quite a bit. Right. And if you want me to, I can explain this really quick. Go to like a 5-second. Right, because that's the low that made the high in this move. So that's where I view the trend switching. Because if I go back to the 15-second, this would be the whole series up. Just in the case here, that's not what I would use to if I was trying to trade to these lows. So really the only thing that told me that this 5-minute candle was going to fail was sweep out here. We opened first, traded higher, and then we got this pretty bearish closure to lower, and then we still have these equal lows. So, and then now I ask myself, okay, is it more likely to reverse here, go trade out through these highs, or to go take this low, right? And in my eyes, it's more likely to go take the low. So the thing is, why don't I talk about SMT in my model? The thing is, I use SMT, I do, right? But the thing is, I find so many people try to use SMT for every reason to get into a trade, and they don't understand it's mainly a confluence or a supporting thing to it, right? So that's why I don't really talk about it much, because once people get the model actually down, then they add SMT. It makes a lot more sense than, oh, it has SMT here, I should look for this, it has SMT here. It's like, focus on the model first, then look at adding SMT. Oh yeah, that's sick. So, and then this is what I mean, see, aggressive up, aggressive back down. We're consolidating. It's not likely we're gonna reverse from this consolidation, so that's why I was expecting this low to get taken out, right? And then if we go back to the 5-minute, there we finally go. Now this is something, like I said, I don't really want to see it take this low come back up like aggressively, because then it just runs these highs, and if this is gonna fail, that's gonna fail, right? This would just have to kind of waterfall down, and that's the area I'd want to see it go to. Or the -1 you can also use for very low confidence scenarios. Not gonna lie, I was doing the 1 minute 5-second with your model and passed an eval. Yeah, what drugs are you taking? I guess that'd be my question. How to use 839 3010 within my model. That is my time video. That's gonna be the most helpful. Because I just mainly use it in terms of manipulations or forming highs, lows, stuff like that. So if 830 goes higher and I'm already bearish, well then I'm expecting 9 to continue lower, and then 10 will either be a reversal or a continuation, right? So after this candle forms, we'll probably take a look, see what happens. But like I said, if this doesn't just kind of waterfall down, it just doesn't make sense to me to have it trade much lower. Because if it goes boom, boom, then I see it taking these highs and then consolidation, right? Either reversal or it just consolidates. So that's why I was saying I just wanted to waterfall. And we go back to our 15-second where we were kind of talking about things, right? There, you can see it's a little discretionary in how I chose that. That's more so experience. But once we did get closure below there, we have this whole consolidation goes. Now we have the 5-minute closure. But like I said, I don't want to see price trade too much higher here. Like all I want to see is really a sweep of here, and then it to fall back lower. Because if you look, there's no swing in here, right? And there's not really a fair value up to up here. I don't really care to have it reach up there, but I know this is a lower time frame swing point here. Right, so if I go to 5-second, I chose the swing point there. Right. Of course, it made it just absolutely equal. See if it comes back for it. But does that kind of make sense? Hopefully. The only reason I'm dropping to like really low time frames is I can't really just sit on stream for a whole day to teach a daily candle like this, right? So that's the only reason. See it come back, ideally take out this high. But any other questions before we hop off? So I think I'm gonna go ahead and hop off here soon, because I think I got most of the questions answered. Let's see if we start this little waterfall down. It's kind of a lot of the question. Well, not even interested in, but that's what I anticipated to do. If we're gonna continue. You just missed my 15-second little one I was just talking about here. This is a little bit unlucky. 3 equal highs. The thing is here, we just have like a perfect little consolidation here. The scenarios are, if we sweep this first, come back in the range, then it goes takes its highs. Goes takes this high first, then it can trade a lot lower. So, let's see. It's all about closures and if-then statements. If this happens, then this happens. Kane is T-Trade's overpaid Uber driver. He actually, yeah, he did take me. He has been driving me a little. But to be fair, I helped him, what? He was driving, so I was just telling him what was happening with NQ. I said, oh, we closure here, you're good. All right, let's see. Man, I do not miss the days that I was on the 15-second chart. Let's see if it just goes or not. Actually, I think this is a great little learning experience. We had a huge expansion here. Usually what follows there. Oh, let's see. Let's see if it waterfalls or if it comes back into this range. If it comes back into the range, closes over this, takes that, goes back up into here. I'd prefer the waterfall because that would be more fun. But I think I'm gonna hop off the 15-second chart. Hopefully you guys enjoyed it. Very rare I've ever been on that. I noticed that when trading against the trend, the model often fails. I think that is a very good sentence and why you need to have trend and bias in analysis. Yeah, I mean, like I said, I don't have huge expectations for this move down. That's why I was saying it would have to waterfall. And then I'm not really even looking for it to trade to these lows because of how this candle's forming. I'm looking for it to trade to this hourly, just old double, and then here. And yeah, quite the waterfall. Not bad. I mean, I don't watch afternoon session, so. And then now this next candle would just have to do whatever it wants because I don't really care anymore. It's enough of a little waterfall for me in range. Don't go chasing waterfall unless it's NQ. You feel? But yeah, that's about it. When we leave highs like this, can I trade away from them? Sure. That's when I need more confirmation. And that's why I said, like, if we would have taken out this low more aggressively and we just made equal lows, then I wouldn't have even thought about it. we left it. But I think that's it. Any last questions before I go ahead and end the stream? Wasn't that unicorn model? I don't use the unicorn model. But also there's no breaker in here at all. But this is the target I was looking for. So a little waterfall. If I was going to trade it on something like this time frame, I'd have just been in around here. And then something like that. Right. But I'm not trading that. It's a 15-second trade, not a crackhead. And then I would just exit right there. It's that level. It takes a minute to get it uploaded, but get rid of that. Continuation entry would have been a lot cooler if it did something like this. That's what I would have preferred. That would have been ideal. It would have been a lot easier. Because then with that, that's your new opposing candle. But see why you want a waterfall when price or highs look like that. And then now you don't care about any of this. That would be my target, because if I'm trading against the daily trend, I'm not trying to guess where lows or like try to reach all these external targets, right? And that's why oh, what a level. Some say the bodies tell the story. Kind of funny. That makes sense. Does that, I just want to let you know why that, does that make sense for why this would be my target and not these? Because of the daily range and what it's doing. And then I'll end the stream. Just as long as that makes sense to everyone. When I have low expectations, I'm not expecting lows to get taken out, I can then use opposing candles as my target, because if we're going to get support to trade higher, what would you look for? Opposing candles. Where would respect in opposing candles? The opening price to the mean threshold, or the 50%. So I mark out 50%. That's where I'd anticipate it to trade to if it's going to even go higher here. Right? And then if this forms the low, where is it going? Back up to those highs. Right? All right. I think we'll go ahead and end it there. I don't see any other questions. So with that, I hope you guys have a great rest of your day. See you next time. Go ahead and end the stream there.